Hello again, fellow BeachBum traders, and welcome to part 1 of our weekly trading game plan for the week of February 7th through February 11th. And it looks like earnings matter again, huh? So this week we saw Facebook report Meta Platforms, the company formerly known as Facebook, report disappointing earnings and tank and pull the markets down with it. And then we saw Amazon report better than expected earnings and rip and pull the market up. And things like Pinterest and Snap reported better than expected, or at least as good as expected earnings, and ripped up, huge percentages. So as we've talked for several earnings seasons already, it's not even so much the earnings themselves as how does the market react to those earnings. And then what we want to talk about is how can you make money from that? How can you benefit from that? So let's talk about the earnings calendar, what's coming up this week, how can we play that, strategize, benefit from it, make money. So let's get started. Okay, since it looks like, barring any major global events like Russia invading the Ukraine or something this week, that again, earnings are going to be in focus this week. Earnings are going to matter this week. So let's start this week looking at the earnings calendar from the past week and how you can see the results of a given stock's earnings, and then let's see who's coming up next week. So I'll put the direct link again back in the description box. We've used it before. It's a link on investing.com. There's a link to investing.com on our BeachBum Trading website. Once you get to investing.com, you can go to tools. You can see you can get to the economic calendar. You can get to the earnings calendar. Here I'm on the earnings calendar. And then you can select this week, next week, etc. So you can scroll down. We had tons of earnings the past week. Some beat, some missed, some beat on EPS and missed on revenue, or vice versa. Missed on EPS, beat on revenue, and reacted accordingly, often pulling their sector with them, related stocks with them, and or the whole market, like we saw with Facebook and Amazon and some others. So as we've talked before, and part of our strategy going forward for next week is, you want to focus on when is your stocks, the stocks you own, going to report earnings, and you want to listen to that and react accordingly. But also, if you own stocks in a sector similar to a company that's reporting, the results from that stock may impact the stocks in the similar sector that you own. So again, earnings matter. It's important to listen. It's important to see the market reaction and react accordingly. Similarly, if you're looking to buy a stock, we'll talk more in our strategy again. But if you're looking to buy something, it's on your shopping list, it's on your watch list. If you listen to the earnings and it has a negative reaction, maybe it's unwarranted, irrational, that may be your opportunity to buy. Some of our best trades have been irrational reactions to earnings reports, like IBM. We bought IBM on a rational drop on an earnings report, made a nice profit. Coty, KOTY in the past, etc. So these are opportunities. Be aware of who's reporting earnings, what sector are they in, how can that impact stocks you own or stocks you want to buy. So again, this is last week, and we can do a find on this page, and if you want to see what were Facebook's actual earnings, you can do a find. Okay. Meta Platforms, they beat on revenue, missed on EPS. And another factor I wanted to bring up that we've talked about before is it also matters what they say in their earnings call. So another thing I wanted to share with you as a bonus for this week is I have a video It's an unlisted, currently unlisted, and we haven't premiered it yet, but it's called How to Set Alerts on Calendar Events in Thinkorswim. And I'm going to put the link to this video in the description box below. You can go watch that. It will show you how you can set an alert in Thinkorswim for both when the earnings report comes out and also when the conference call is. And so you can get audible, sound alert, email alert, a text alert, etc. when the earning report is on, and so you can set these events, these alerts on stocks you own, stocks you want to buy, etc. So I hope this helps you. Again, I'll put the link to this unpublished video in the description box below, and then we'll premiere it in the future. So again, this is the past week. You can see the earnings report for the past week, and again, in the upcoming week we have tons of earnings, so you can click over, see next week, and I'm not going to go into these in detail because again there's just tons of earnings. So it's important to see who's reporting each day, what type of sector are they in, and how that may impact stocks you own, stocks you want to buy, etc. And then we want to listen for irrational earnings reactions and act accordingly. So again, I think, again, barring global events, earnings are going to matter again this week. It's important to know what's coming and listen as well. So another important place to watch the earnings calendar that we brought up on pretty much a weekly basis is on the market screen in Webull. So I'm in the market screen in Webull. Again, this is the browser version of Webull. You can get 2 or more free stocks with your copy of Webull with our link in the description box below. If you select calendar earnings, you can see the short list of upcoming earnings. So we could see, after market close on the 7th, here's the stocks that are reporting earnings. There's a before market open. So again, this is a shorter list, nearer term, etc. So I hope that helps, and again, that's where we can see the calendar list of upcoming earnings. Okay, I also wanted to quickly show you how you can find the expected next earnings date in Finviz. If you do a search on any given stock in Finviz, and you can find our affiliate link for Finviz to get your own copy in the description box below. Again, if you search for any stock, I've searched for Corsair, CRSR. It'll bring up the summary page for that stock, and we can see in the middle pane there is an earnings field, and it will tell us that the next earnings is expected on February 8th, and AMC is after market close. So again, I just want to very quickly show you in Finviz how you can find the expected next earnings date. Sometimes this is going to be an estimated date, and sometimes it's an actual reported date. If you do want to confirm that, often you can see a press release somewhere down here where they report when their next actual earnings date is going to be. So we can see there's probably the article where they reported that date. So we can confirm that's an actual date. So again, just want to quickly show you, okay, here's another way to find the actual date in Finviz in that earnings field in the middle column for any stock that you want to find when is the next earnings date. Okay, I also wanted to show you how you can find the earnings date for a stock in Webull. I'm on the stock screen in the online browser version of Webull, and again, as always, you can get 2 or more free stocks with your copy of Webull with the affiliate link in the description box below. Again, I'm on the stock screen on the online browser version. If you search for any symbol, I'm going to search for Corsair Gaming. Click on it. It will display however you have that stock screen configured, but typically the chart, and you'll see there's a little pull out panel on the right hand side. So if you click on that double arrows in the upper right hand corner in the browser version to pull out that side panel, it will show me details, and again, this may depend on how you've configured this panel in your copy of Webull. But we can see here's some more details about that stock that I searched on, and we can see, okay, Corsair Gaming has earnings upcoming on 2/8, and a nice thing about Webull as well is it gives me the EPS estimate. So that's the estimated earnings for Corsair Gaming. That's when their earnings is expected to be reported. So again, I can take note of that and plan accordingly. So again, I hope that's all helps. This is a way to find the next earnings date for any stock in Webull. Okay, let's also talk about some of the economic data that came out last week and how that impacted the markets, and then let's look at what kind of economic data we can expect for next week and how can we strategize to make money from that, any market reaction to that economic data. So these are my notes from some of the reporting, and then we'll look at the calendar from last week and see if we see anything else. But the thing I pointed out on Monday was the Chicago PMI, which is the manufacturing index, showed a little higher than forecast, which again is another indication that inflation is still hot from a manufacturing side, so that will flow through to consumer inflation. So again, inflation continues to be hot. We've been saying this for a long time. It hasn't changed, and that those are going to be driving factors for the Fed increasing the rate of their rate hikes. Inflation, job strength we'll see, and economic, data growth, etc. So Tuesday we saw construction spending was low, and then we saw later that increasing mortgage rates hit the housing sector. The ETF for the housing sector went down. A lot of the home builders went down. Home Depot, etc. The remodeling trades went down. So again, increasing mortgage rates, or an increasing Fed's fund rates driving into increasing mortgage rates is hurting home builders. So that's something to be aware of. If you're into home builders right now, those factors are going to impact home builders. Again, we saw remodelers. I think that's a little bit irrational, but that is what it is, and that is what's going on. So we also saw the JOLTS job openings. There's still more actual openings than forecast, and then there was quite a bit of discussion about how to count the missing jobs from the Great Resignation. How big is it? There's still a lot of outstanding information on how big is that gap really, how many people have resigned or not coming back, etc. But again, it still says, hey, there's more open jobs than people looking right now. Then on Wednesday we got the OPEC meeting. Again, they said they're not going to make any change currently to their planned output increases. So right now they're increasing at an additional, I believe, 400 million barrels per month is the increase rate. So each month they're going to continue to increase. And then we saw oil inventories actually went down versus going up forecasts, and you all saw the result of this towards the end of the week as oil just ripped up into the low 90s. I think it went as high as 93 on Friday, I believe, and we can look at that if we want to. We'll see it in the future. So then we also saw on Wednesday non-farm employment change. It was a big miss. It was down versus being forecast to be up. And then on Thursday we saw continuing jobless claims was higher than forecast. So the employment picture is not very good. It's deteriorating. Although we saw initial was lower than forecast. So the people that are getting laid off now, entering the jobless claims now, is lower than forecast, but the continuing is still high. The employment overall picture is below what's expected. So the employment picture is not good. So then we saw ISM, non-manufacturing business activity was lower than forecast. So again, that says, okay, from the manufacturing side, this is probably a lot has to do with continuing supply chain issues. So we're continuing to have supply chain issues. Companies that are dependent on global supply chain, again, are reporting those issues in their earnings conference calls, and they're getting hit. Those that have adapted and are getting around those, Tesla says, yeah, there's supply chain issues, but we're dealing well with them, and they're rewarded for dealing well with the supply chain issues or not having them. Then we also saw natural gas storage was down more than forecast. Natural gas this week, we'll see in the futures, was very volatile, spiked up, dropped down, etc. Great scalp swing opportunity. We've been making good money on swinging natural gas in the recent past. And then Friday we saw the actual payroll numbers come out. Average hourly earnings was up. So again, this is another indication that inflation's hot. Salaries are increasing. That's very sticky inflation, right? Because once somebody gets a raise, they're not likely going to accept a pay cut just because the rest of the inflation has declined again. Non-farm payrolls was much better than forecast. So a lot of those jobs have been filled. People are on the payroll, so there's more taxpayers in that category. But the unemployment rate was a little worse than forecast. So there's still a lot of people that just haven't come back, whether they're looking, not looking. I don't think this accounts for people that are totally given up and not looking anymore, but the people on unemployment and reporting still looking are in that number, and that's still worse than expected. So that's the economic data from last week. Additionally, we can go to the economic calendar in investing.com. Again, you can get to investing.com from the link on our homepage on our BeachBum Trading webpage, and then you can either go News, Economic Calendar, or Tools, Economic Calendar. And if we quickly scroll through for this week, you can quickly see some of the reds and greens. Here's retail sales was not good. Also, household confidence was not good. Housing starts, we talked about the housing sector, was not good. GDP is low. So again, we're seeing some deterioration in the overall economy. But inflation is high, salaries are high, etc. So okay, so that's German CPI. I can filter this down just to a U.S. Just by going filters. I could do clear. Okay, let's look at the economic data coming out in the calendar for next week. So if I click next week on the economic calendar in investing.com, we can see what's to be reported on each day and when. So on Monday we've got just some general. There's a Treasury bill auction, and that could be interesting. The way we'll see in the futures, the way Treasuries have been behaving. Trade imbalances, import-export on Tuesday. Wednesday we've got some mortgage data, so again that will impact housing, home builders, etc. And again, the remodeling stocks, Home Depot, Lowe's, etc. And then we've got crude oil, some oil and distillate data on Wednesday again, so that may impact oil and possibly natural gas. Again, we've got a Treasury auction. Then Thursday we've got standard CPI data, so this is inflation, jobless claims data all on Thursday morning. And again, those are inflation indicators, employment indicators. And those have a tendency to impact the market, particularly with the market reacting to potential Fed actions, and we'll talk about that in a few minutes as well. We've got jobless claims, and then on Friday we've got the Michigan sentiment data again. So, later in the week we've got some important economic data coming out that may cause the market to continue to be volatile. And that, along with earnings, I think we can expect a continuing volatile market as we've had, and hopefully our trading game plans have helped you weather those market volatilities. And again, we'll talk more in our strategy at the end about what strategies can we use to handle the volatility, the reactions to earnings, the reactions to economic data, etc. Okay, let's quickly go through the data available in Finviz. Again, as always, you can find our affiliate link for Finviz in the description box below. Right now I'm on the home page. We see where the markets ended up on Friday, February 4th. You see the Dow headed up and then came back down a little bit. NASDAQ kind of ripped up. A lot of this was, I'm sure, was driven by the positive earnings of Amazon. So again, earnings matter, not just to an individual stock, but also to the indices, the ETFs that they're in. Again, another thing to factor in is what ETFs are these stocks in, and do you hold them or do you want to buy them? Maybe we'll do further videos on how to analyze the individual stocks in an ETF, or what stocks or what ETFs a stock is in. Let us know in the comments below if you think that would be helpful for you. Again, we see S&P was up a little bit, but it had a downturn at the end of the day. But we can see they're still underneath the covers. The market is still not strong. It's pretty weak. We still have 72% of the stocks are below their 200-day moving average, only 27 above, and 75% are below their 50-day moving average. And more are making new lows than highs. Advancers, decliners was pretty balanced, a few more advancers than decliners. So again, under the covers, the markets are still weak, very volatile. We'll look at the futures in a second. See some of the news, labor supply nightmare. Okay, so extending into second half. So this is going to continue into the second half of the year. So plan accordingly. Again, that says we can expect this kind of volatility, choppy market, etc. So we want to plan accordingly. Pain trade. Fed monetary policy. Yeah, we're going to talk about Fed rate hikes, etc. Interest, okay. And Amazon breaks a record for a one-day gain, and just the day before, Meta Platforms, formerly known as Facebook, broke a record for the biggest loss. So you can see how much earnings matter right now. If you disappoint, you're going to get punished severely. If you beat expectations, you're going to be rewarded very well. So that really matters right now, and that's where we need to focus on. We can see crude oil, again, it ripped up. This is a short-term futures. We'll see long-term futures in a minute, and then started to decline. Nat gas declined and then bounced just a little bit. Gold's been hovering around 1800. And then we see the treasury yields really bounced up. The prices we'll see in the futures really dumped on Friday. So we'll talk about how we're still looking for a bottom in this area. Once that comes, once the Fed finishes their tapering and those prices bottom, I think there's an opportunity there. We'll see in the futures in a second. Okay, let's quickly look at the groups, the sectors. So I'm going to click on the Groups tab in Finviz. Again, you can find our affiliate link for Finviz in the description box below. This will show us the sector performance across a number of time frames. We can see, Friday, energy, technology, consumer cyclical. Actually, Amazon is classified in consumer cyclical, so that's why we see that big gain there. Again, for the week, that pushed the gain for the week up, but again, energy, very positive. Everybody was positive for the week, but for the month, only energy and financial are still positive. So everything else is negative, and consumer cyclical for the month is still negative. So short-term trend is positive for that area. Longer term, it's still energy financials. And technology, again, has been very volatile, bouncing back and forth. Um, so again, those are the trends we want to watch. The longer term, the 3 month, again, is still energy, consumer defensive. So uh, those are kind of the short-term, long-term trends going into next week. And now we'll look at the futures. Okay, now let's look at the futures in Finviz. So I've clicked on the Futures tab in Finviz. I want to see the charts. Again, we could see, a lot of volatility in the indices. We could see the Dow decline, bounce, and is in decline. S&P similarly, Nasdaq similarly. We see they're quite a bit down. They're making lower highs, so that's a indication of a declining market. Again, I'll call it a bear market. Technically, it may not be, but again, we're in a declining market, and so we can expect to see these tests of the upper highs and then bounces down. And sometimes these rebounds up are going to be very violent. We saw we had 3 or 4 days of very positive, and then a bounce down that was again very violent. Russell's just again trailing off in decline, etc. We see the VIX is elevated again. It started to retrace, started to come back down, and then towards the end of the week bounced up a little bit. It's hard to tell which direction it's going to go. We'll continue to have increased volatility. We see oil just ripped up, popped up. I think it made, like I said, as high as 93. People are talking $100, $120 oil. We'll see what happens in those regards if there's action, because obviously oil and gas prices impacts the economy, high inflation, etc. in all aspects. And we see these, rips and then bounce downs in natural gas. Again, we've been playing this, going long, with swinging long and up with oil, swinging down with cold. I think this is a great opportunity. This continued volatility in natural gas is a great opportunity to make a lot of money on these swings. Gold's been pretty stagnant around 1800. Silver too, a little decline. We'll talk about this in part 2. We think there's an opportunity in silver. Again, we'll come back for part 2 and we'll talk about that opportunity further. We can see all the other commodities are very high. So again, these are all indications of continuing inflation going to push the Fed to increase rates faster, more, etc. to curb inflation. And that's kind of the message for this week is I'll talk about that further in a minute, about the Fed rate hikes, etc., and our strategy. And then we could see bonds, really, the prices of bonds dumped and the yields spiked just at the end of the week, countering, we continue to see this risk-off mutual fund cycle where, okay, they decide it's a risk-off day, and so they dump stocks and jump into bonds, so the bond prices go up. That's, in my opinion, illogical, because we know demand for bonds is decreasing. There's also a factor going on now is that Europe is talking about raising interest rates more quickly, and therefore their bonds are becoming more attractive, I think. And again, this is my opinion, not financial advice, but I think the inflow of money from Europe into U.S. Treasury bonds that we've seen for a long time, because European bonds were negative, is going to start to reverse, and you're going to see the Europeans buying more European bonds, and if it gets to an extreme, you may see outflow from U.S. bonds into European bonds. But again, that inflow is drying up. So again, demand for bonds is drying up. That's going to drive prices down, yields up. And so again, we'll talk about opportunities in that area in the near future. And then we saw the dollar against the euro really dumped and again, that has to do with the ECB's actions, and they're talking about raising interest rates more quickly. So that trend is likely to continue as well. So now let's wrap up with some strategy. How are we going to play all this? How are we going to make some money for next week? So again, let's talk about some strategies, some further trends, themes. How can we make money for this upcoming week, February 7th through February 11th? And then please come back tomorrow for part 2. We'll talk about the individual stocks that we're adding to our various watch lists, our shopping lists, our bullpen, etc., and additional strategies about how we're going to try to make money next week. So the inflation data and the good economic data has been causing more thought that the Fed will hike rates quicker and possibly more and possibly even larger. People are talking about a 0.5 rate hike again in March, or 6, 5, 6, 7 rate hikes in the next year or so. So again, this hot inflation data, every time we hear hot inflation data, the markets tend to tank because they figure, okay, the Fed's going to have to hike rates faster and more, and the market doesn't like that. The tapering thing is kind of, unknown. They're going to end tapering by March, but how many bonds and how fast they're going to sell bonds, reduce their balance sheet is still an unknown. And again, the market tends not to like that. So the more they think, okay, the Fed's going to have to reduce its balance sheet as well to curb inflation, slow the economy down so it doesn't overheat, the market doesn't like that. It's going to tank. So any economic data that comes out that indicates hot inflation, that the economy is too strong, is going to cause further downside pressure on the markets. If the inflation starts to cool off, maybe it'll be a positive, but I don't foresee that, haven't foreseen that in a long time. So again, with all that and the earnings, some companies are reporting great earnings, some are reporting very poor earnings, and they're being either punished or rewarded accordingly. So we can expect continued volatility in those regards. Now that provides opportunities. This kind of volatility is great for day trading, scalping, and short-term swings. You can, ride the short on the decline, be either using leveraged ETFs or if you're doing individual stock shorts, you can catch these irrational reactions to economic data, earnings, etc. to the downside, make a nice profit, or the upside. Again, if you hear some particular stock report great earnings, look for similar stocks that may not have reacted yet. That's an opportunity then to jump on those because maybe they're going to ride the coattails of the one that reported great earnings. Again, it's hard to catch the news right at the moment, and a lot of times it'll run away, and we're not one to chase, but again, you can find somebody who's likely to move in sympathy that hasn't moved yet, and that's a great opportunity. Again, for any kind of short-term trading, this market is great. You can make a lot of money. This is very difficult for long-term investors and long-term swings. Again, it's volatile, it's large declines, a lot of red. It's just painful. If you're a long-term investor, I know it's painful. Long-term swings, again, it's painful. A lot of times they're red, large red. Your P&L looks bad long-term. The only advice, and again, there's not financial advice, is my opinion, but in this environment, just don't look at your P&L. Don't look at your portfolio. If you're a long-term investor, come back next quarter, next year, etc., unless you want to reposition and try to, reposition for a volatile downtrending market, get some hedges in there, etc. That may be a good idea. But again, if you're watching this on a daily basis with this kind of volatility, that's just painful, and you don't need that. And that's not your goal, right? If you're a long-term investor, you're looking for years, decades, etc. You know, you get your 10% a year, and whether this year's a good year or bad year, the past couple have been good, you're going to ride it out for the long term. So focus on making money from irrational reactions to earnings. If somebody tanks, like I guess Microsoft initially went down on the headline earnings and then went up, that was irrational. That's an opportunity. If you think somebody's being punished and it's a turnaround story, that's maybe a great buying opportunity. So listen for those irrational reactions to earnings, irrational reactions to economic data, and take advantage of those, because these are the opportunities where you can really make a lot of money, is when the market overreacts to something, and then as it digests it, it recovers, and you can benefit from that. So I hope these all help. Please let us know in the comments what you thought of all this. You know, what additional information would you like? What are your ideas, thoughts on strategies to play this volatile market where, you know, earnings matter, economic data matters, etc. How are you making money in this market, and what do you think? We hope that you like this video. Please, you know, smash the like button, give us a thumbs up. If you're not a member of our BeachBum Trading community already, we hope that you will choose to subscribe and click the bell icon to be notified as we produce and publish further videos. Again, share this video with your fellow BeachBum traders, fellow traders around the world, and let us know what you think in the comments below, in our Facebook group, our BeachBum Trading Facebook group, etc. And good luck, and have a great trading week. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below, and let us know if you found our weekly game plans helpful in the comments included below, and let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck, and have a great trading week.